to get your thoughts on the announcement from the Fed last week, the 50 basis point rate cut. You described it as a victory lap. Why?
Well, I think it was no surprise. I think the Fed has sort of seen the cooling that's occurring. The rate change, I think, was not unexpected. And frankly, Hamilton Lane had been suggesting to our customers that we thought 50 basis points was going to be where it came in. And I think things seem to be sort of well under control. You've got a nice balance here of good growth in the economy, still seeing very strong customer spending. And I think this is also signaling a chance for the private markets to sort of get back to more business as usual.
Very clear. What do you think this means for private markets? I know that's you're basically where you invested. I just would like to understand what is the upside, if any, from the changes in monetary policy?
Well, I think the main upside is that people want more certainty. I think when you see a world where there's a lot of unknowns, and again, up until recently, the Fed was a bit of an unknown, it really cools down deal volume. And so I think with the rate cut and a more clear signaling, and we're sort of seeing other of the banks following suit here with lowering rates, I think that provides more certainty for private equity investors to begin deal doing. Now, it doesn't also hurt that their borrowing costs are going to be lower. And so that also makes transactions just simply easier to accomplish.
Naturally. I would also like to understand the thoughts around IPOs. In your notes, you suggested that we're likely to see a more significant number of IPOs next year. My question to you is, where and what sectors are more likely to see this activity?
Well, I think what you've seen is a very cool IPO market. In fact, one of the reasons why private markets have been a big beneficiary of this is that investors are realizing that the number of public companies continues to drop globally. And so being public continues to be challenging. That said, we're seeing a bit of a cooling off. The pipeline of IPOs is starting to build, and we expect as we move into next year with the US election behind us, that you'll start to see more robust activity. My theme for IPOs is going to be profitable businesses. That's what I think that we're expecting to see, the biggest volume of businesses that are growing and generating real profits. Right now, the public markets don't need more unprofitable businesses. There's already plenty of those in the public markets today.
But where are those profitable businesses at this stage?
Some of them are going to be very traditional. So retail businesses, manufacturing businesses, more traditional businesses that are still growing. We're seeing some good space also in the financial services market. Again, well-run, profitable, growing businesses. I think what you're going to see less of is less speculative, technology-oriented, some revenue, but cash burning. That's what's not going to be super well received right now in the public markets.
I would also like to get your thoughts on the innovation, if there is innovation in Europe. This is in the context of a stat that I came across. There is no European company with a market capitalization over 100 billion euros that has been set up from scratch in the last 50 years. My question to you is, given your visibility within the private markets, any sort of guidance that this is likely to change in the near future?
I don't see a lot of that changing near term. I think what you see is a lot of the infrastructure for startup businesses and for technology businesses, for better and for worse, has gravitated back to the US. And so we're seeing entrepreneurs continuing to try to get those businesses up and running, mainly in the US markets. That's again, back to the IPO question, that's the market that has historically been more receptive to those kinds of businesses. And so it's made sense to domicile them there.